And so today we holding a short webinar on the to talk about automotive e-commerce, and the actual title is Building Great Auto E-commerce Experience Lessons from Around the Globe. Our principal Jonathan Turpin will present that shortly. This webinar is sponsored by our friends at Frisbee, and I would like to welcome them to play their video before the webinar, and we'll begin right after that. Thank you. Thank you, Frisbee, for making this possible. And Jonathan will now present a few slides on the topic, and we'll have QA after that. Over to you, Jonathan.
Good afternoon, everyone. I hope you can see the slides. We're going to talk today ahead of our conference next week, Autos Buzz, about building a great e-commerce experience. Before we dive into the experience side of things, I want to kind of try and answer one question that kind of keeps coming at us from different directions. So we're going to touch very quickly first on the pure play players and what's happening with them. As I'm sure most of our audience will know, share prices amongst the Cazoos and Carvanas and Auto1s have collapsed substantially. And at the moment, there is no sign of those prices bouncing back. So if you look at the market, the two slightly higher lines are Auto1, and Auto1 remains higher valued, in fact higher valued even than Carvana today, because it has its original C2B and B2B business, although actually its valuation is below the pre-COVID peak for that business alone. And we have Aramis, which is more of a hybrid in many ways between a traditional dealer and a digital dealer model. And I guess in the past it's been perhaps less favoured by the market, but at the moment that balance between the hybrid, between the more of a physical and a digital is actually kind of playing reasonably well in the market. So we have share prices down, no sign of them coming back. But what's actually happening in the market in terms of sales of those businesses? Results for Autohero were out this morning. We have results for the first quarter for Cazoo too, and we have guidance for what's going to happen over the next year. And what you can see from the chart is of the listed players, all of them have kind of been reasonably flat at the end of 2022. Cazoo is in the middle of restructuring its business. Its guidance for 2023 is that sales volumes will be down about 40% while it restructures, rebuilds the business, and then it will push on from there. Autohero's had a very good first quarter. Its guidance for the coming year is that its sales levels will be about flat versus 2022, maybe a little bit up, but it's actually started pretty well with a rise in the first quarter. And Aramis says that its business will see some organic growth, which suggests it's going to be not a startling growth, but something reasonably flat over the year. So I think what we're going to see is a year now of consolidation, and then these businesses are going to start to try and push forward, growing more substantially again. And what we're seeing at the moment is a very substantial focus on improving gross profit per unit, improving individual profitability. That's going pretty well with them, and that will put them in a better position to begin to invest again in marketing and grow the businesses more strongly. So when we look at Cazoo, and Cazoo is kind of the most challenged, I think, of all of the businesses out there in terms of its position, we look at what they've said recently about their continued ambitions, both in the medium term and long term. And what's kind of pretty clear is that the ambitions haven't really come back very much. What's changed much more is the overall pace and time to get to those ambitions. So here, if we look at what they're looking at retail units in the medium to long term, we can see versus what they were forecasting in May 21, that at that point they were kind of somewhere forecasting for 2024 between their current medium and long term kind of view. And similarly, gross profit per unit, we're seeing, you know, a similar kind of perspective in scale, just a longer time scale to get there. So one last slide on these before we get into more of the consumer experience side of things. Don't worry too much about reading what's on the slide. It's quite a busy slide. There will be a copy of the slides available afterwards for people to download, etc. But we built ourselves a very simple, quick and dirty model of EBITDA, focusing on the operating business, not worrying about all of the shareholder side and all of the funding side and so on, to get a feel for what kind of assumptions would get it to profitability and when. And you can play around with different assumptions within it. We've included a couple of slides to give you a sense from one scenario that kind of meets the points on this page. But if we bring the business back to what seems like a more realistic growth rate, given the history and what we're seeing elsewhere in the market and elsewhere overseas, and if we kind of look at the costs, kind of making a progress that seems, you know, sensible and balanced in comparison to other kind of comparators, and we take the 2023 guidance as being likely to be executed for Cazoo, and we kind of we sit in the kind of range of their long-term guidance on GPU, gross profit per unit, which we think is reasonable guidance, then we get to a kind of view that probably the business can break even on an adjusted EBITDA basis at some point in 2025. Its break-even volume is maybe in the 80 to 100,000 units range. It's unlikely to be lower than that, we think, but it could be a bit higher than that. Cazoo has already said that it will need to raise funds in the second half of 2024. So our view is, providing that it is showing the kind of progress it would be hoping to make towards its long-term targets, that it should have a notional value for the business that is comfortable enough to raise the kind of funds it would need to then push it further towards break even. So it feels to us that this is a business that's going to be you know, repressed for a couple of years, but still can achieve what it wants to achieve. There are lots of unknowns and uncertainties in that, but it should be able probably to get to profitability. So now going to turn to marketplaces, and for those of you who have seen our other webinars and come to our conferences, you'll know that when we look at e-commerce models for marketplaces, we tend to split them into two categories. So we have what we call Classifieds Plus. Auto Trader is really the exemplar of this model, the capability that's currently piloting and will be rolling out, which is a philosophy that the dealer owns the car at the point of sale, sold under the dealer's brand. It can be collected or delivered, but again, delivery, you know, probably arranged by the dealer rather than the marketplace. So this is very much a model that puts the dealer at the center of things, and is very, very dealer friendly. At the other end of the spectrum, it's a small spectrum, as there are relatively few marketplaces involved in e-commerce at the moment. We have what we call direct to consumer. This is the model initially piloted by Smile, where Smile owns the car at the point of sale. It will own it very temporarily. It will buy from the dealer. It will check it. It will have it delivered, and it will be sold under the marketplace's brand. And Mobile has piloted a similar model with a few differences in Germany as well. So this is how we've kind of classified the market, but increasingly we're beginning to split that classification further, as we think probably the biggest challenge and question in terms of developing these models is around the level of quality assurance you bring to the sale of the car and the process for selling the car. So we're now beginning to split down between Classified Plus and Classified Plus with what we call strong QA. And car sales would be a good example. I'll come a little bit later to to what that means in terms of differences in the model between the different players. And likewise, we've begun to split down, although there are only really two of them, the direct-to-consumer side into a slightly lighter approach to QA and a stronger approach to QA, as evidenced at Smile. Our sense is that the change in the market, the collapse of the pure plays, the challenges there are really kind of pushing a change in sentiment, and that's kind of coming away from the direct-to-consumer model and moving much more towards the classifieds plus model. And that's because, you know, in a world where you've got huge investment going on with third parties, etc., it makes sense to be investing in direct-to-consumer, piggybacking off the marketing that's around more broadly in the market, and also to be presenting the kind of strongest competitive offer. But with those competitors drawn back, there's kind of less incentive to push in the direction of that model. We also believe longer term, very much that on the classified side, we're going to move to a stronger QA model, more than the light touch, hands-off approach, driven by the need to create a really strong consumer experience for this business. That doesn't necessarily mean the car sales approach to it, but taking on board a bigger range of kind of methods for QAing with dealers, etc. So looking at the direct-to-consumer model, the biggest change over the last year has been with Smile, the introduction of charging of consumers for delivery and for registration of the cars. We've said for a long time that delivery will eventually be paid for, but I think the market situation has accelerated that process, and I think probably Smile has introduced delivery charges earlier than it would have otherwise. So we've got consumers being asked, if they buy a car through Smile now, to pay around 448 euros, typically for the delivery and permits. When we look at the ads for a car, and this is the same car on Smile, you will see two ads for the car. One is the original dealer's ad, which is still listed separately, and you can still buy the car through the dealer. The other, the one at the bottom, is the Smile ad to buy the car through Smile with delivery. And you'll notice that there is a 200 euro difference in pricing, that the Smile car is 200 euros more expensive than the dealer car. And this difference in pricing is before the delivery charges and the permit fee. So what we've now got is, you know, typically somewhere in the region of a 650 euro difference in price, extra price to the consumer for buying through Smile. And I think what this is really indicating is that the model is very much becoming a model for sourcing a car at a distance where you can't find a comparable vehicle near you, and you're willing to go and pay that extra amount for the kind of remote sourcing possibilities. And it's kind of positioning Smile away from its original positioning, where the car would have been same price as the dealer, available on a like-for-like basis, etc. We think one other key factor in this change is probably what's happening behind the scenes in commercials with the dealers. We don't know for sure. Smile tells us there isn't a change in model, but we think that this 650 euros isn't being banked by Smile, but is almost certainly being used to some extent, at least, to improve the kind of range of terms it can offer dealers and the nature of kind of relationships that it can build with them. So that's kind of quite a significant change, and the most significant one in DTC over the last year. As we see the world going forward, the number one issue is quality, and for marketplaces dealing with dealers to ensure that the quality is solid. So here on the screen, you can see a Trustpilot review for one of the marketplace services, and in essence, what it says is, I ordered my car, the dealer withdrew the car from sale, so I couldn't have it. I'd already paid, and then I didn't even get my deposit refunded in the way it should have been. It took longer to come, and customer service and all the usual kind of challenges. Those of you who have sharp eyes will notice it's got Google Translate at the bottom, and this is a translation from a German Trustpilot review from Autoscout Smile. And it's notable that since December, in December, its Trustpilot reviews were about a 4.3 level. They've come down now to about a 3.8 over that kind of 4 or 5 month period. And if you think about it, the way Trustpilot reviews work, that means they're actually rating lower than that at the moment, because they will be benefiting from the historic average of the 4.3 in the ratings overall. So kind of what's happened on the quality side to make that happen. We had a good look through the Trustpilot reviews, and you've got to be careful. They don't have a full picture by any means of what's kind of really happening within the business. But what we notice is that the top complaint is about dealers not releasing cars. So a challenge around the dealer relationship between Smile and the dealers and getting the cars out to consumers. The second thing, and we don't know the underlying causes, we're seeing lots of kind of, or a fair number of complaints about delivery timescales, so extended delivery timescales. And I don't mean by that, things being a couple of hours late. I mean, cars arriving weeks late rather than when they were originally kind of committed. We're seeing refund timescales not being met, and we're seeing, the usual complaints about customer service, etc., when things go wrong. I think what's really interesting is that we see within the Trustpilot reviews very few about defects on the cars. So actually, it seems that for Smile and what's happening there at the moment in terms of feedback, it's not about problems on the cars per se. The model, the quality control seems to be working reasonably, it would seem from the outside. It's more about the process and a fair amount of that process kind of with dealers. So when we look forward, we think this is absolutely core to the consumer experience, how you deal with quality in general. And we're looking forward, there are a number of models out there in the market that address the way quality is handled. And I'm going to kind of start with one of the pure plays with Cazoo, because really, in a sense, this is potentially the benchmark. And what you're competing against as a marketplace is businesses that are doing in-house refurbishment. And that's not to say that in-house refurbishment is perfect. Actually, even though Cazoo has very good Trustpilot ratings, if you look at most of the complaints, they're actually around faults with the car rather than the process, etc. So clearly there are challenges there. And as we all know, there are really good dealers who are great in quality, and then there are some at the other end of the spectrum where they're maybe more of a challenge in managing. So what are we seeing in terms of QA at the moment? At the very light end of the models that are being rolled out for e-commerce, and remember, Auto Trader is only in pilot, and so it's an evolving kind of offer anyway. But we're seeing a very light touch approach with dealers. There's the statutory 14-day, I think it is, money back guarantee, but very little in the way of either selecting dealers or controlling factors that affect the quality of car, like age and mileage restrictions and so on. So very light touch approach. Next along the line, we've got car sales. Car sales has taken a much more assertive approach with dealers, and it is both imposing criteria on cars in terms of age, mileage, etc., but it's very selective with dealers. It's still only running with a very small number of dealers on its Car Sales Select program, and we understand that it's kind of quite hard with dealers where they are where they fall out of line with the process of delivering to the right standards. It has its own kind of dealer certification program that says these are the dealers that are good. And interestingly, it forces an inspection process which can be done by the dealer or can be done by a third party, but the dealer has to warrant that the car will meet the inspection report as provided, etc. So it's got some kind of tough commitments around that, and a much more selective approach all in all with dealers. If we then look at the direct-to-consumer businesses, they run different levels of quality control. Mobile really is very much a small pilot. It only sells cars that are up to 3 years old, so its quality issues are going to be less anyway. and it's running a kind of a set of non-mechanical checks. So bodywork, interiors, the functioning of the lights, etc., but not going into the harder side of the mechanics of the car. And then Smile is running its own hub and is inspecting cars. Cars are shipped from the dealer to the hub and then off to the consumer from there. Any issues that are picked up are addressed. And that's clearly a much more expensive way of doing business, but potentially is much stronger in controlling quality overall. And I want to throw one more example onto the list of something that's only happened in the last couple of weeks. Netherlands is always an interesting market, lots happening there, very competitive market, unusually competitive market. And the business Binco, which is an e-commerce provider that works with dealers, was acquired by Autotrac, owned by Automotive Media Ventures. And this is a business that sells cars directly from dealers. It's actually very highly rated in terms of the Netherlands equivalent of Trustpilot in terms of the quality of what it ships. It does its own inspections, it has inspection hubs and has independent inspections. I think the interesting thing here that's going to be worth watching as it goes forward is it's an independent business that will be integrated in, and we assume it'll be integrated in as well into the marketplaces. And there's an interesting question to see whether having that kind of standalone brand identity, standalone website, etc., will actually help it push a kind of different approach to quality than may be possible sometimes within broader marketplace environments. So we've got kind of quite a range of things going on within the quality side of things. The next thing I want to pick up is C2B. While things may be going a little bit more slowly on the e-commerce side, I think there's a huge amount of focus in the marketplace on C2B. People are seeing it, marketplace is seeing it as much more strategically important, but I think they're also realizing it's potentially a high value per transaction service to be offering if you can build it out in the right kind of scale. And what's been interesting recently is we've had several conversations with people around Motorway in the UK, which is particularly getting noticed. This is a dealer auction model. It pitches itself as no middleman. Clearly, it is itself a kind of digital middleman as such, but there's no wholesaler involved. Cars are directly handled by dealers. And it's been very successful with consumers. Only 5 years old, has got to 2% penetration in the UK. And its real value to consumers is, even though it's below a consumer-to-consumer price, it is still offering comfortably above wholesale prices. And I think the kind of, we can also see, with Schibsted, with Netbill, with Autovex up in Norway and Finland, there is a lot of interest more generally in these kind of auction models and whether they change the dynamic in C2B and really kind of push the growth faster. It's worth saying, just before we move on from Motorway though, in the UK, We Buy Any Car is still 3 times the size, and it still is getting, well, not still, it used to be a business that had a reputation for chipping away at prices, etc. Nowadays, it's changed the way it works, and it gets absolutely excellent Trustpilot ratings, as you can see. So there's a kind of very interesting kind of competitive dynamic in the market. So what are we seeing, again, looking at C2B at different models? We've got a whole range of kind of models in the market. The most basic, which is one that marketplaces traditionally quite often have had, still have, is one where the car gets quoted a value online. That's not a precise value. An inspection by the dealer determines the actual value, and then there may be a kind of conversation around price, etc. And then the car is sold to a single dealer from a panel. We think this version is going out, and we'd be surprised if Mobile and others continue it kind of for very much longer, because the market has moved very definitely towards a no haggle, strong price online, price fulfilled by the company that buys the car. Next model I want to pick up is wholesaler-based models. So Auto Trader is running 2 of these in the UK. One of them is Instant Offer, where it will make an offer for your car. It works in partnership across both of these models with Manheim. Manheim, the wholesaler, will pick the car up, and providing you haven't been dishonest on the form, take the car away, etc. And the second is focused particularly on trade-ins, guaranteed part exchange, and that's also a wholesaler-based model, but specifically set up that you can trade your car in with a dealer. You know what the price is given to you by Auto Trader. Again, providing you've been honest on the form, you will get that price. If the dealer's unhappy with the car, they can ask Manheim to take it away, and they will get back the money they paid to take it on. I think the big question with this, with the wholesaler models, is in the light of the auction models and the pure digital auction models, will these be able to price as effectively, given that you've got a much more substantive middleman in the form of the wholesaler involved? And it may be different from simply buying cars than part exchanging. Consumers in a part exchange may be a bit more comfortable not getting the absolute best price for the convenience of the service. So the next model I want to kind of pick up on is what car sales are doing. And again, car sales are taking a very kind of assertive approach with dealers. They've been quite selective. They have a model where cars are priced by car sales. Car sales has great data because it's ownership of Redbook, etc. And the dealers are not really allowed to vary from that price at all, unless there is some kind of fundamental problem with the disclosures around the cars. And so you've got the benefit, again, of a straight-to-dealer model. It's a panel-based model rather than auction model, but the data that car sales have allows it to price reasonably close to the C2C price, well above wholesale, and the relationship and the way it manages the dealers means it manages to keep up the quality as well as the price. So quite a kind of interesting model there. And then more fundamentally, we've got the auction models coming in. We've seen Schibsted very effectively growing Netbill and AutoVex, both integrated with their own marketplaces and as independent businesses. And I think the big question in the market is whether actually the auction model is now the way you almost have to go because of the price competitiveness in it. And we've got some players that have really shown that it can be done in a very digital way with very little manual intervention at all. So other aspects of consumer experience, there's unfortunately 20 minutes is not very much time to go very deeply in, but just want to pick up 4 other things that we think are really important emerging on the kind of transaction side. First is how you build your market extension products. So there's a kind of very significant consumer question in here of how you balance people who want to sell their cars into areas outside their normal catchment area, including the national players, the big digital brands, but also traditional dealers that might want to sell in 1 or more regions. These are very high value extensions. They can produce a very good return for the dealers who are good at operating them. From a website perspective, you want to balance and not be over delivering in terms of what's remote delivery in terms of cars. So there's a kind of interesting question in here of how you build these products and scale them out. And I think quite a lot of people have done quite a lot of kind of work in this area. Next thing is reservation fees. I think at one time, people were seeing reservation, or marketplaces were seeing reservation fees as a way of being a revenue stream in its own right. I think the mindset has kind of changed on these. They're becoming much more a nominal fee. They're becoming about validating the level of purchase intent. They're typically now refundable if the sale doesn't proceed, or deducted from the sale price if it does. So there's a kind of, a different way of thinking about it and seeing this almost as a super lead that allows the dealers to engage with the potential buyer and know that they're serious about the purchase. Dealer financing, very hard to execute. Most of the European businesses at the moment are working with a single provider. I think the really interesting thing here is going to be to see what Auto Trader finally releases, when it gets its deal builder to market, it has pushed, very strongly to produce a very dealer-friendly, very hybrid way of working. And we think longer term, once businesses begin to scale, this is going to be quite an important, quite a fundamental part and quite a profitable part of their overall operations. And then finally, the last thing I'd bring out is how services label their car buying. We think it's going to be very important to have some kind of label, some kind of sub-brand that you can really begin to market and separately identify the services that you produce that are e-commerce services. So not simply tagging it buy online, but actually giving it a name and building an identity for it. So those are some of the things we're going to touch on. I've been through, I think, 12 slides here. We're probably going to go through about 120 at the masterclasses that we're giving at the conference next week. So if you're coming to the conference, please sign up. And if you're not coming to the conference, there's still time to get a ticket for the conference too. So overall messages, pure plays, probably throttled down for 2 to 3 years. Car delivery, we think, is a small but valuable segment. We see things in the market increasingly going towards collection with a small segment only for delivery. Quality, for us, this feels like the absolute critical thing for marketplaces to get their mind around. The model moving very much towards the Classifieds Plus with deeper QA. Strategically at the moment, probably almost more effort going into C2B and figuring out how to make that work. And in C2B, it feels that that price is increasingly trumping convenience. So if you're not signed up to Autos Buzz next week, we have some fabulous speakers, and I just draw attention to one. Phil Robson, who runs the whole of the used car business for Stellantis, is opening the conference. It's the first time we'll have had a keynote from one of the OEMs focused very much on their used business overall. So great set of speakers across the board. And for those of you who can't make Autos Buzz, but if you're really interested in what's happening in the States, the Global Online Marketplaces Summit early June has 3 of the big 4, TrueCar, Cars.com and Car Gurus presenting. So that should be really well worth seeing. And in both of these places, you can also meet our sponsor, Frisbee. And I'm going to hand over to Tanguy from Frisbee to give you a couple of minutes talking about how their services relate into the consumer experience.
Thank you, Jonathan. Let me bring my slide to the screen. And so, yeah, thanks a lot. As you said, I just got a few minutes, but I like to expand on one topic, which is the consumer experience. That was part of your conclusion, being an essential component. And I would like to highlight mainly one figure today, and then I'll expand on it at Autos Buzz. But just to put some perspective, one, on a traditional classified model, revenue is driven by seller, and therefore everybody is getting a great seller experience, right? Making sure the seller get the right value, they understand the value, they get even more value, and they're happy. Moving toward a transactional model, it means that actually the revenue is driven by the buyers. So it's changed quite a lot in perspective, and it means that you need definitely to take care about the consumer experience. This is the one driving the money eventually. That said, reality is not as white and dark blue as on these slides. And I think that, Jonathan, you mentioned it quite a lot during the presentation. In between the pure classified and the pure transactional, there's a huge space, whatever we name it, hybrid model, classified plus, etc., where actually the platform are going to deliver more and more services. Book a test drive, the financing option you mentioned, delivery, the leasing, whatever things down the road, right? And what we know is for everyone exploring this space in the middle, and honestly, from what we see from all the people working with, there's a lot of people actually looking in there, and even from the big brands that might, so it's not a question of you fall in just one of the 3 categories, like Mobile is classified plus and transactional. Autos could also, they got services in 3 of them. But if we look at the central piece, the classified plus, this is where you need to have both a good seller experience, but also a good consumer experience, definitely. even more toward the direct-to-consumer model. But we know it's not an easy part. And actually, I would relate to this slide earlier. Why is complex to get a good consumer experience? First, it's a distributed process. And I really like when you mentioned the fact that out of most of the problem, they're not connected to the car itself. They're connected to the process, to the fact that the dealer is late in delivering, etc. So indeed, it's hard to control the consumer experience when there's a third party involved you don't fully control. And the second one is the volume game, right? We're talking about huge volume. Each consumer is unique. How do you make sure that you are building the right unique experience for them? So the one number I would like to highlight with you today is this is coming from the work we're doing with classifieds, marketplace, but also OEM. And we know that by building the great consumer experience, you can increase by 26% your transaction at the end of the day. So there's a massive impact in actually optimizing each step of the journey, thinking about the consumer, making sure the consumer feels like in great hands, basically from beginning to the end. I think one of the questions in the chat was like, can a classified actually build an as good consumer experience as a pure player? I don't know, but I know that there's still a lot of room to actually improve it and to get to much better efficiency. As I was saying, this is my cliffhanger. I would have loved to have half an hour to explain you that, but it's only a 5-minute max talk right now. But I will expand on this 26% at Autosbuzz. I will split it down. I will explain how you can reach that, how you can actually build up a model to increase your transaction thanks to a good consumer experience. So I hope I'm going to see you over there. And if you're not there, well, feel free to ping me and I'll be happy to share some of these insights afterwards. Thanks a lot, and over to Jonathan and Konstantin for the Q&A.
Thank you, Tanguy. That's very useful, and another reminder that a lot of the information will have more detail explored and discussed at Autosbuzz. So we hope to see you there. And those who are not, you can connect with Tanguy separately with your questions, or reach out to us as well. We're all online on our website, aimgroup.com.